Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for XRP, specifically taking a look at what historically has been the bottom of these bear market corrections and what might come in next, and whether or not we want to be dollar cost averaging into XRP now or whether or not we want to kind of wait a little bit longer. So as I get into this, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with all of the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find on down there. So why not go ahead and check it out today. Okay guys, let's get into this, right? So we are using Bitstamp here because we have more data available to us, okay, and we're just paired up with USD, so it's a bit of a calculation. It's not using a stable coin pair or anything like that, okay. We're on the weekly chart, and I'm on the weekly chart because obviously I want to show you everything that's been going on slightly longer term. So to start with, we're going to go and apply the basic kind of Elliott wave principles here, and you can of course acknowledge that this is across multiple years here, potentially this move, right? And 2017, you can quite clearly see the impulsive structure here of a wave 4 triangle as well, which is really obvious as well when you take a look at that on this weekly chart. More so obvious when you take a look at it on our daily chart, for example, right? But here you have this triangular wedge. We broke up, we had the high, and then we pulled back down again. And here again we can make some measurements using the fib retracement tool here. You can see, you know, we actually pushed up quite high to just a little bit past the 2.618. Okay, so really important that we kind of just note that that was a really good time for XRP. But obviously after a 5-wave move like this to the upside, we would obviously expect to see the corrections, right? So although we are talking about, you know, the bear market lows, I think was actually in 2015 for BTC, but we actually have this for XRP about 2014, so a good surge up there. We pulled back down, but we didn't actually break that low that was over here. So this is actually a wave 2 correction, and again inside here these corrections, they would be you know, basically corrections in the sense that they're a 3-wave move. So an ABC would not technically be correct because a zigzag pattern is a 5-3-5 structure, so technically speaking it would be a WXY in here, but you know, I think many people just kind of articulate them as ABCs because it's easier to kind of roll off the tongue. But yeah, we note that it's basically a 3-wave move just inside here, and then we obviously had wave 3, which was a good run up. And again, you know, this is something that's quite interesting as well. If we take the wave 1 here and we actually move this down, we can move it over to our wave 2 low. You can see that we just pushed past that 1.618, but we didn't go to a full or a 2.618 extension here. But the wave 4 pullback obviously did go for an overextended 5th wave, right? So really good growth on wave 3, but it's not an unusual amount. So it's not an overextension or anything like that. But wave 5 here is an overextension because it did go to the 2.618, which normally a wave 5 would either mirror wave 1 or be between 1.382 and 1.618. So we know that that was an overextension, and obviously we needed to cool off, right? So from the highs of 2017, we obviously then start to pull back down, right? And again, I'm going to use the ABC structure, even though it's not technically the right structure, but here you can see that we actually move on down in an ABC fashion. Now what we'll do is if we measure this distance using the fib tool again, we're just going to move that over to here. We can see that the 1-to-1 ratio was not actually achieved. Okay, so it wasn't an exact 1-to-1. Instead, what we found ourselves bouncing on was the 702. Okay, so I'll just make this a little bit bigger so you guys can actually see this, right? So if I pull that down here, you can see that the 702 comes in at 12.2 cent. And basically the March crash, the pandemic crash in March 2020, we actually did come down as low as 11.4. So a little bit higher than the 786 at 9.8, but just a little bit deeper than the 702. Okay, but not a 1-to-1 ratio. A 1-to-1 ratio would have been 5.6 cent, and we didn't have that. Okay, again, I went through this with Bitcoin video the other day, so check that out. But basically, these fibs, they absolutely must be set up correctly if you're on logarithmic, and you must make sure that your Fibonacci retracement tools are also on logarithmic scale. Okay, so you can see here that we don't hit the 1-to-1 ratio, but that's okay. We also found really good key support. So when I often kind of refer to XRP charts, I'm often saying, you know, anywhere between the 618 and the 786 is usually a really good area to focus in on. And here you can see a very good clear example of this, that we basically only really closed one candle below the 618. Other than that, they were just wicked down into here on this weekly chart, and then we kind of progressed on out, right? So ABC structure now, an ABC correction down like this is very much what you would expect to see after that 5-wave move upwards, right? So we can see that that actually pulled that down. But on the grand scheme of things, if we were to take this entire move up to the upside here, and we were just kind of think about, you know, how much of a retracement did this actually come down to, well, it was actually a little bit deeper than the 382, but not as much as 50%. So pretty actually, it held up pretty well. And, you know, we are looking for that kind of reversal point. However, it's also worth noting that we could, of course, be in a multi-year retracement for XRP, right? And this ABC structure here, this ABC structure coming up. Now, this is not a wave 1 because a wave 1 would have to be 5 waves, okay? And obviously we have too much overlap, right? And you're not allowed to break those Elliott wave rules. So we know this is not a wave 1 move up. Instead, this is more of a correction. Again, you'd have your ABC, more of a technically WXY, but ABC for the purpose of the video here. We have ABC, a 3-wave move going up, not a 5-wave move going up here, okay? So it's not a wave 1, and this is not a wave 2 afterwards. Instead, you just have this potential move coming up here. Now, obviously, to speculate, you could think of maybe this entire thing's a macro A, B, and we're going to go down to some crazy lows, which, you know, is possible. Everything in crypto is possible, right? We should definitely understand that. But I think it's very unlikely. And it's unlikely because the macro picture on Bitcoin is vastly different to what you're looking at in terms of this really bearish scenario of XRP crashing down to some crazy low numbers. So we should be prepared for more of an ABC to the upside. This is something that I've been talking about recently on many of the XRP videos, right? Instead of a big ABC down, it's actually A, B, C up, right? And again, that takes us up into new all-time highs. So it's a different way of looking at it. But technically speaking, the data could be read in both ways. We could basically be looking at this as an ABC down, but we could also take a look at it as a big ABC up, right? And anyone who's been following the recent XRP videos will know that my position on this is actually that we're in a triangular wedge on the daily, okay? And we're just in this E wave that's can potentially come down significantly lower. Obviously, key areas of focus for me are right down here at 17 cent, but I don't think that's necessarily a low that we're going to come back down to, but it's somewhere that I am kind of keeping a close eye on. Now, for those who love trend lines, you can, of course, acknowledge that we have just pierced through this one. But again, trend lines are so easy to invalidate. I don't tend to rely on them too much. And you can draw them however you want, right? You could hypothetically draw these on the closed positions, right? And you can still get the same scenario, or you can use the wicks. I use the wicks because the price went to that specific area, and I do not mix them. If I'm sticking to one strategy, I'm going to basically align to that entire strategy. There you go. I've actually now drawn them so that they all connect, right? So trend lines can be interpreted in multiple different ways. So we've just retested this trend line at 33 cent. We're going to bounce from it, but I do think we're going to test it and we're going to move back down. But let me show you a few additional things. So obviously here we can acknowledge that we did not hit our 1-to-1 ratio with our ABC structure to the downside, or our WXY. What about this move to the upside? So here, of course, you know, we can definitely know it's not an impulsive move because essentially all we've done is move up to the 1.236 here, a little bit past the 1-to-1 ratio. And of course, we've got so much overlap. Wave 4 is never allowed to overlap wave 1 and all of that kind of good stuff. So it's important that we acknowledge that, you know, if that was a wave 4, it's completely collapsed down. It cannot be a wave 2 because if it's a wave 2, then we moved up, and then wave 4 has crossed wave 1. So essentially, we know it's not a wave 1 move on the macro. So what we're not looking at here is a wave 1, wave 2, wave 3, 4, and 5. That's not a thing. That's not happening. Okay, so we can park that one. We can pin that. That's not true. But what we should be thinking about is A wave up, B wave down, C wave up. That's complete, and now we're looking at the same but going down. So this time what we're doing is we're saying, okay, well, what's going on this side of the macro, right? What is it that's going on here? Well, we have the A, we have the B, and we have the C. And is that on a 1-to-1 ratio? Well, we can go ahead and measure that using the fib. We can grab it, we can transpose this, and we can see that the 1-to-1 ratio was hit here at 37 cent. We actually went down a little bit deeper. We tested this trend line. Whether you choose to believe in trend lines or not is entirely up to you. But essentially here you can see that we pulled back down, a little bit lower than the 1-to-1 ratio, but a little bit higher than the 1.236. So again, all of that is very much intact. If I actually go ahead and just align that a little bit better, you can see it's 37.217, and obviously we moved down to 33.3. 33.362. So essentially we're doing okay there. So for the most part, that is basically our correction done. However, one of the things that's really important that we have to acknowledge are the sub wave counts, right? And this is something that we've been talking about a lot on the channel, specifically because there is a triangular wedge in here, okay, and it's inside this entire move, this ABC structure, and it actually goes back, yeah, it comes right away back to this point, same time. So if I grab hold of this, what you've got here is this move coming down. I might just have to align that to those. Again, you can draw these trend lines however you want. The wave counts are more important in my opinion. We can draw it from this low to this low, for example. It doesn't really matter too much. Of course, we could articulate it slightly differently by coming over here and then just drawing it down into this one here. Ultimately, I'll show you what this looks like in a moment on my actual chart rather than Bitstamp. But you can see here we're in this triangular wedge. We broke this. Right, we broke the trend line, and that's okay because this is an E wave, and an E wave is allowed to break that trend line. The E wave does not have to follow and does not have to be considered inside this pattern. Okay, and this is what really trips people out quite a bit, is when they see this, they go short or whatever, thinking that you're going to the bear market, crazy bear market lows, and it reverses on you very, very quickly, because after an Elliott wave triangle, you do normally expect a 5 impulsive move out, and that's what I've been talking about on my other charts. So I'm going to bring that up now. I'm going to come over to my XRP chart here. I'm going to bring it up into our daily, and then we can see here, this is our A wave, B wave, C wave, D wave, and then a breakdown to the E. Now, the E, I do anticipate moving back down a little bit lower. And again, we are kind of targeting anywhere between 17 cent and 30 cent, and it can literally be anywhere. This is an unpredictable wave. The only thing that we can do is keep an eye on the sub wave counts so that we can make sure that we're aligned to its thinking, and we aren't being caught out in any way, shape, or form, right? So here we can see that we've got a lot of moves going on here, and there's nothing really of note other than the fact that we're in some kind of B wave triangle right now, where we're probably going to be breaking down from this again, and I reckon we're probably going to be visiting about 26 cent approximately before this thing reverses on up. Again, because we're in an ABC structure, I say if I bring this back up into this one and I bring it up into our weekly here, as I said, right, this could be considered a big A wave. This is our B wave, and then we have that C wave going higher. These triangular wedges, right, these Elliott wave triangles, they can only appear in a wave 4 position or a wave B position. Okay, so we know that this is not, we haven't had 3 waves up, right? So we know that this cannot be wave 4, therefore it has to be wave B, and if it's wave B, then that means we have wave C to come. Okay, so knowing all of these things are very important in helping us understand what is the most likely outcome of our triangular wedge pattern here with an ABCDE. It means that essentially we haven't got a kind of 5-wave move up, we've got an ABC structure going up. Not only do we not have the correct wave counts over here to allow for us to see us have an impulsive structure, so it's not a wave 1, right? That's not what's going on there. It's not a wave 1. Okay, so I'll just do wave 1. I'll just write that in there. And then I'll just put a cross through it because it simply isn't a wave 1. Instead, that's an A wave. Okay, this B wave here is our Elliott wave triangle, where the E wave I anticipate moving down lower than 30 cent, probably in somewhere in that range of about 26 cent. And then from there, we get a rally up. And again, we're looking for that 1-to-1 ratio. At the moment, this is indicating about $6.55. Again, we could potentially then see this move out much, much faster, depending on what happens with Ripple and the SEC lawsuit. Of course, I would be expecting a 5-wave structure, and if all the timings align nicely and there's a Ripple XRP settlement, then essentially this target might be up here at a 1.236 or a 1.382, might even go for a 1.618. Anything is possible, right? Supply and demand are king in terms of actually getting price discovery, so I don't want to speculate too much here. I would say that we are looking anywhere really between $6.50 at the moment, upwards to probably towards a maximum level. Yeah, I would say $20, but anything is possible. Technically, it could go much higher if no one sells XRP and it only ever disappears off exchanges. So that's on you, XRP community. If you hodl, the price will go up higher, but it does require everybody to hodl. We wouldn't want to, basically see some retail investors selling on others or whatever, and of course institutional players will dump their bags as well. So just bear it in mind, have a good strategy on your way out in the same way that you would have on the way in. But yeah, so if we were to talk about, where we think these bear market low structures are, let me just come back up in here, where we think all of these lows are likely to be. I think essentially it's really important that we understand the structure of what happened previously. These 1-to-1 ratios are very key, but they don't always come in. Sometimes they go a little bit over, and sometimes they go a little bit under, but they are close, and they're very, very close to it. For Bitcoin, for example, I am tracking a move down to about 22,900, and in doing so, I would anticipate XRP being about 26 cent, and then from there, I would expect to see this impulsive structure start to emerge, where we start to see this move going up much higher. Obviously, this could go into 2023. Before we actually see new all-time highs, and timing is not something I'm going to be able to predict in the market. It's not something that Elliott-Wave theory is going to be capable of, but essentially we do have structure, we do know what we're looking for, and we're not misunderstanding any of these structures for something that they are not. And essentially, there is still the possibility, whilst I still think we are in an ABC structure going up, mainly because of this Elliott-Wave triangle right here, and it cannot be anywhere else. Essentially, that would mean that this was our bear market low structure here, the same as Bitcoin, and then of course we're going to have that C wave riding up much higher, and we are not looking at that bearish scenario right now where we are A, B, and C crashing down towards, I don't know, let's say 3, 4, 5 cent or something like that. So we should bear these things in mind, and continue. I think essentially we are in the right place, we're at the right time, and we are looking at some really good progression to the upside. Now guys, I'm going to leave the video there. If you found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I will catch you all in the next one.